This segment sponsored by Foster Financial. Welcome back to Money Monday with Foster Financial, and today we're going to talk about what to expect as you are filing your taxes this year versus last year. And joining me is their Vice President, Caleb Doane. Hey there, Caleb. Hey, how's it going?
It's going well. How are you?
Good. Okay, so tax season is happening right now, and people are probably thinking like, okay, I got quite a bit back for my 2025 taxes. Okay, what's going to change in 2026?
Yeah, so I mean, as people are getting those returns back, a lot of people have already filed, and especially for those over 65, they're noticing that they're getting a higher return than what they have in previous years.
Yeah.
And the main driver of that was the One Big Beautiful Bill that got put into force last year. It applies for the 2025 tax year. One of the big changes was that additional senior bonus that was implemented. So this was an additional $6,000 deduction that those over 65 could take on their taxes. And so if you're married filing jointly, if both spouses took it, you got $12,000 as an additional deduction on top of your normal standard deduction that you were able to write off on your taxes. And so this led to a lot of people getting a nice return, which is a great thing to see, right? Of course, we like more money being in our clients' pockets, which is really good. But it's possible that instead of just taking that money as a return, for 2026, there could be some good tax planning, tax strategizing that can be done to benefit the most from this additional deduction that people are getting.
Okay, so this extra bonus was just 66 and above?
65 and above. Yep,
and so people who are in mid-age, they didn't see any type of boost?
They could have elsewhere. I mean, some of the other changes, there was some additional deductions if you were working overtime, some additional deductions if you get a lot of tips. Maybe you weren't reporting the tips, anyways, but so they might have seen some relief. The people who saw the most would be those who are over age 65. So a bummer for us, right? But
I don't get tips.
right, exactly.
Caleb?
Yeah.
Got some coins now.
Certainly.
Yeah, that's crazy. Okay, so what you're saying is while you get this big boost, be smart about it and see how you can reinvest it or see how you can make your money work for you?
Well, one of the tax planning strategies that we're looking at is Roth conversions. So this is where we take pre-tax money and we move it over into a Roth account. And when we do that, the amount that we move over is taxable at your ordinary income tax brackets. And so we'll withhold a little bit for taxes or send a little bit to the government for taxes and estimated payments. But oftentimes when we're calculating how much to do for a Roth conversion, we're looking at what somebody's income is. And then we're saying, all right, you have $20,000 of room to the top of the 12% tax bracket. So let's do $19,000 of a Roth conversion. With this additional senior bonus, you might have an additional $12,000 of room. So last year, or 2024, maybe you could have done $20,000. 2025, maybe you could do $32,000. In 2026, maybe you'd be able to do a little bit more as well. And so we can use up the room in that tax bracket to do things like higher Roth conversions or tax loss harvesting, harvesting certain gain on different types of accounts, as opposed to just allowing that room to give you a little bit of an extra refund. And so we can use it a little bit more to your advantage.
And then, so in order to do that, are there qualifiers? Like, is there a minimum amount that you would have to be willing to put into that account?
No, I mean, Roth conversions, there's no minimum or maximum when people do it. So the limiting factor is just typically what somebody's tax bracket is. And we could go higher than that, but usually the tax benefit starts to diminish, the more that you're paying in taxes for those conversions. So we find that the 12% tax bracket, which a lot of people are in retirement, that's a very attractive tax bracket to be in retirement. Wish it was zero, of course, right? But 12%, historically, that's a good tax bracket. And so we want to use up the room in that tax bracket. What happens is if people don't do those Roth conversions later on, if a spouse were to pass away or required minimum distributions start or they get a big inheritance, they can get kicked into a much higher tax bracket later on. And the next tax bracket is the 22%. So it's a big jump from 12 to 22. So if we know that we have room in the 12%, we love paying taxes kind of early by doing those Roth conversions so that we don't have to pay it in a higher tax bracket later on.
So when you talk about the tax bracket of the 12%, that's at retirement age, or when you get, or typically, right? Typically. Are people paying tax on their Social Security benefits that they're receiving?
So, yeah, I mean, Social Security, like, in itself is a tax. It's like a payroll tax that you're paying to put money into the Social Security system.
Right.
And then later on, when you turn around and take that money out, a portion of it is also being taxed up to 85%. Yeah, of course, the government taxes you coming and going. I'm sure nobody is surprised that there's taxes everywhere, but you're always disappointed to find that it's even in more places than what you anticipate. And that was one of the goals of the One Big Beautiful Bill, was to kind of reduce taxation on Social Security. The actual tax laws around Social Security did not change, but there are these additional deductions that come in and reduce your taxes overall, and now give you a little bit of extra room in your tax bracket to maybe do some tax planning like Roth conversions.
Yeah, okay. Well, there you have it, because people want to spend that money when the tax
yeah, it's very easy to do.
comes in, but be smart with your money and plan for the future.
Yeah, absolutely.
All right, thanks, Caleb.
Thank you.
And if you would like more information about Foster Financial, we'll have their website and their phone number listed below. They do offer complimentary consultations, and I'll see you after the break. This segment sponsored by Foster Financial.